So the agenda today is first we're going to describe the structure and the benefits of being a member of the VIC Investor Network. That's the primary focus of today's presentation. We're also going to give some examples of portfolio companies that the VIC Investor Network have invested in, and to give an idea of the types of investment opportunities VIC Investor Network members see. And for that, we're going to do one diagnostics company, one medical devices company, and one therapeutics company. So today's webinar is not presenting a new investment opportunity. It's more a focus on the network and its structure and its advantages. So if you're already an existing VIC Investor Network member, or you've already seen a presentation on the VIC Investor Network, you might not want to stay on today because it would be repeat for you. But for the prospective new members, this will be a great introduction and give you a real flavor for what you might expect if you decide you'd like to become a VIC Investor Network member. I'm going to cover the VIC Investor Network overview, and then the first two companies on the list, CardioWise and Clixo, and then I'm going to turn it over to my colleague, Michael Arniger, who's going to cover Solaris Vaccines, and then he'll lead the Q&A function. So with that, let's get started. Again, I'm just going to start with the VIC Investor Network. Michael and I are serving as co-managers of the network. He and I together have many decades of startup company experience in roles ranging from founder to executive to board member to investor. We've each raised tens of millions of dollars of capital along the way. We've led companies from early R&D all the way to commercialization and company exit. If you'd like more information on our backgrounds and also the full VicTech team, you can go to victech.com/team and see who all is involved. So the VIC Investor Network is part of the VicTech innovation ecosystem, which is bringing world-changing medical innovation to market. That includes medical devices, therapeutics, and diagnostics. Everything we do is deep tech, meaning a strong intellectual property foundation. So we don't do things like pure digital health, but across life sciences, we're pretty broad. The VIC Investor Network is one element of the VicTech ecosystem. So VicTech is a venture studio that forms and builds companies from the ground up based on innovations typically exclusively licensed from universities. And we have license from universities all across the United States and also internationally. So we search far and wide for the top medical life science innovations that can serve as the intellectual property foundation for new companies that we form, and then we put in place the initial executive team and help move the companies forward. There's other important elements. The Vic Foundry is an incubator. Sometimes we see technologies with enormous upside, really exciting technologies, but there are simply too many things that aren't known yet, too many risks for us to recommend to our VIC Investor Network members and for us ourselves to put our own capital in. So instead, we'll work with the inventors, typically, again, professors at universities, and go after non-dilutive research grants, which, for example, SBIR grants that we can do in the Vic Foundry to further de-risk the technologies. And then after they've gone through that process, then if those results were strong, then we would form the new company and put the initial capital in from VicTech and the VIC Investor Network. So the Vic Foundry is a pipeline of new technologies. We also have a talent pipeline called the Vic Fellows Program. These are scientists and life science executives and MDs who want to learn more about our process for commercializing life science technologies and how we analyze the opportunities And so they serve as members of our opportunity assessment team. And then we also spend time with seminars and training them on everything we've learned over the years we've been doing this about the commercialization process. And of course, the VIC Investor Network, which is what we're focused on today. And then we also have a variety of other important strategic investor relationships across the country. And we are, we do have a nationally distributed footprint. All the yellow flags here are places where we have executive team members. The dark blue flags are places where we have operations, but not full offices. But we operate nationally. Um, our headquarters are here in Fayetteville, Arkansas, with me, it's my home state. Headquarters offers turnkey support to all the portfolio companies. That includes everything from accounting to HR to marketing communications, scientific and engineering support, and more. And it's a very cost-effective way to build these companies. When you form a new company, all the legal setup, all the benefits package, that's all there day one. The executive team can focus on what you want them focused on, which is, the strategic plan, the development plan, the fundraising plan, the regulatory plan. You don't want them having to worry about all that other stuff. So very, very efficient, cost-effective model for building these companies, and also very focused on risk mitigation, tackling the riskiest things first, and trying to mitigate risks all along the process, of which we've had good success. So being a VIC Investor Network member provides access to really exceptional life science innovation that just isn't available to most investors. The VIC Investor Network co-invests with VicTech. So again, VicTech's the venture studio. It's the largest founding shareholder of every VIC portfolio company. And the VIC Investor Network members co-invest alongside VicTech and on the same terms. And this is a really important part of the differentiation for being a VIC Investor Network member. Having a large shareholder with aligned interests can really help protect the early investor members, the early investors' interests. So often in angel investment deals, the angel group makes the investment. It's at the when a company's got a lot of upside, but it's still got a lot of obstacles to overcome, and then the company stumbles, it's got a high fixed burn rate, it's running out of cash, it's desperate to take more capital. The next investor comes, even though the company's farther along and has strong preferences over the early investors. So even though they're investing at a less risky stage, they have a very great advantage over the earlier investors. Having a large aligned shareholder like Vic that can help these companies bridge the gap when there's small stumbles and get through that, and can protect the early investors' interests, because the early investors' interests are the same as as VicTech's interests, is a big differentiator and part of the reason that VIC Investor Network members have seen such high returns so far. We are typically a build to sell portfolio company development model, which means normal exit will be sale of the company to a larger strategic investor or strategic company. This is a map of the current investments by VicTech and the VIC Investor Network members. And you can see there's diversification by sector. So therapeutics, devices, diagnostics, and then some related areas. There's diversification from number of investments, and there's diversification by stage, so early, mid, and late, where these years here is years to anticipated exit. So you've got everything from relatively newly formed companies to companies that are ready for substantial exits, and everything in between. Within the VIC Investor Network, there's two membership classes. There's what we call Founders Group, and then members, and then there's standard members. The Founders Group members are committing to invest in every new VIC portfolio company at the time of founding. And they're investing in a blind pool. They don't know, they're committing, they're not picking and choosing. They're saying, hey, we're going to co-invest with VicTech. We like VicTech's process for selecting these high upside companies. Investing at the early stages gives us really outstanding valuations. And so it's the highest upside. But of course, since you're investing at the earliest stage, you also have a longer time for first return compared to someone investing in later stages. You get, with the Founders Group membership, you get two levels of diversification, number of companies and industry sector, but your diversification by stage of development only comes by holding those investments over time. Standard members don't participate in the founding rounds, but they can invest in any investment round after the founding round. And they pick and choose. So unlike the Founders Group, which are pre-committing with the advantage of having such an outstanding valuation, predetermined valuation, the standard members are investing in anything from the round after founding to the very last round before exit, and can get diversification, by all three: number of companies, industry sector, and stage of development. Still, every deal is something that Vic is co-investing in, so good valuations, high upside, opportunity for fast return, all the advantages I've mentioned, in terms of being co-investing with VicTech. So people often ask, well, which is better, Founders Group or Standard? I say one's not better than the other. It really depends on your preferences as an investor. If you're looking for the highest upside and you're okay with a relatively longer time frame, I would suggest Founders Group membership. Founders Group members can also optionally participate in follow-on rounds. It just doesn't count towards their minimum investment commitment, which I'll talk about in a second. Standard members have that advantage that they can put some of their investments in later stage opportunities to have the faster return. So it really depends on what your needs are as an investor. The network is open only to accredited investors. You're probably familiar with that term, but just briefly, it means annual income exceeding 200K or 300K for joint income with spouse, or a net worth exceeding 1 million, either individually or jointly with spouse. There's a 30K minimum investment commitment. For Founders Group members, those are now placed in 10K increments. And then after you've invested your 30K, you can optionally renew, or you can hold off and wait to renew later. Oftentimes there is a waiting group for Founders Group membership. We only have a limited number of slots because we only put a fixed 500K as the founding investment in new companies. So we only have 50 slots at 10K per slot, of which 10 of those slots are held by Vic. But the Founders Group members invest in 10K increments. For the standard members, they can invest in as little as 5K increments. So their 30K minimum investment, which is a 30K per year minimum investment, can be placed across up to 6 companies, or you can put 30K in one company. It's just entirely up to the member. There's no management fees extracted. 100% of the VIN member funds get invested into the portfolio companies. There's no membership fees to be a member. There's no management fees, and there's no carried interest. Our goal in providing the VIC Investor Network opportunity to members is to help provide capital into our portfolio companies. And we're not trying to make any money managing the VIC Investor Network. All that stuff, all the due diligence that, we're involved with these companies from day one. We do months and months of due diligence before we ever form the company based on the giving technology, and then we're with the company all along the process. So there's nothing hidden, no hidden warts. We know about these companies, and we know what's a reasonable, time to put more money in and at what valuations and so on. So it's not running. We don't have the same due diligence challenge that a lot of angel networks have because we've been involved with the company from way back when we were evaluating the raw technology as a potential intellectual property foundation. Each investment round is placed in a separate SPV holding company series to aggregate the voting rights and keep the cap tables of the invested in companies clean. VicTech pays the minor costs associated with maintaining the holding company. There's K1s issued each year, but they're just pro forma K1s showing the zeros because the holding company doesn't have any operations. It's just holding the investment until there's an exit. But VicTech handles all that. No costs extracted from the investors. We do have a secondary market. So the SPV is set up to allow simple interchange of stock among members. So a VIN member can post their shares and any of their VIN investments for sale on the Vic Investor Network website. In order to incentivize someone to buy it, you're typically going to want to post it at lower than the current estimated share value. Of course, that could still be a major step up from what the original share value is, and VicTech does provide updates on estimated values at each new funding round in the company. The entire process is online, and there's minimal expense associated with it. We haven't had a lot of activity on the secondary market, but it's there and available. Obviously, for most investors, it's going to be better to wait till you actually have a full exit rather than selling your shares at a discount. But it's there and available in case someone hits a cash flow crunch and needs some cash. It's available to members. We've got a great track record. There's been over 50 investments placed since inception of the Vic Investor Network in 2013. Again, they're only investing in VicTech companies. So you see a lot of these investments, there's multiple rounds in different companies, but based on combination of actual realized exits and the unrealized returns, which are determined, based on the share price paid in most recent round by outside investors. There's a 38% weighted average IRR across all investments made to date in the Vic Investor Network. The investors can go to the website vicnetwork.com and they can sign in and they can look at their investment history, how much they invested, the current estimated value, the multiplier, and so on. They can look at any company that's currently raising capital and get information, watch the CEO presentation, see the term sheet, etc., and then indicate if they want to make an investment in that company or they have the opportunity to reach out and ask questions. So that's an overview of the Vic Investor Network. Let me remind you, please submit any questions you have via the Zoom Q&A function. Now what I want to do is I want to give you some examples of the types of investments you see as Vic Investor Network members. I'm going to cover an example of a diagnostics company and a medical devices company. Then I'm going to turn it over to Michael to cover a therapeutics company, and then Michael will lead the Q&A as well. So let me start with CardioWise, which will be presenting to the Vic Investor Network either next month or the month following. CardioWise is based on an AI software platform exclusively licensed from Johns Hopkins University. The trade name of that platform is Squeeze, and it's software that analyzes cardiac CT images and provides deep diagnostic insights with tremendous clinical relevance. And I don't have time to kind of dive into the clinical examples, but it's an impressive piece of software in terms of what it can tell tell about the heart, tell the doctor and patient both about the heart. So cardiac CT is a rapidly growing imaging modality. It's really the only test that can provide a single quantitative diagnostic evaluation of the heart system, including arteries, ventricular function, and valves. The latest guidance from the American Heart Association is for patients who present to the ER with chest pain is to use cardiac CT. CardioWise software really provides the most important piece, which is the ventricular function. Um, and GE Healthcare listed here is the largest CT platform provider worldwide. There's others, of course, like Siemens, and they've got significant competitors. The way that GE Healthcare can distinguish itself is not via so much the hardware, the cardiac CT hardware, but more so by offering unique function. And I'm going to talk about now about the GE Healthcare partnership. That is a really exciting part of the CardioWise opportunity. First of all, they have a dedicated cardiac CT sales system as part of a distribution agreement that's been negotiated between CardioWise and GE. GE will provide both the sales and marketing and the first line technical support. Um, all CardioWise will have to provide is this second line technical support, in the case there's things that the first line technical support can't answer. So this not needing to develop its own sales force right from the get-go, and having the first line technical support is a tremendous savings for CardioWise in terms of cost to launch its product. All terms and the key terms of the distribution agreement have been agreed on. The initial rollout is going to be on GE Healthcare's Card IQ cardiac CT platform, which is a subscription-based system growing at over 20% per year. And this is something that's really exciting. The squeeze will be included as a standard feature on all Card IQ system stations. So all the existing installed base, it's a annual subscription. So each quarter as people renew, that will generate revenue for CardioWise. They've spent a lot. The CardioWise software, Squeeze software, is FDA cleared, and over the last couple of years, they've spent a tremendous amount of time working with GE on validation on the GE Healthcare's platforms. Plan is to do soft launch in November and then full launch in January. There's also other sales channels beyond the dedicated cardiac CT platforms. There's an even larger base of installed general purpose CT scanners that will also begin to be sold to in 2026. But the difference with the Card IQ is that because it's a standard feature, this is a pretty assured revenue ramp, which is something you rarely see. I'm sure as investors, you see over and over companies making revenue projections that don't come true. Of course, this still is based on launching with GE, in January, but once it launches, that revenue ramp with the Card IQ rapidly growing to over 12 million in the first year, and then beyond that, that's something rare where you've got a relatively assured revenue ramp, and that's just a piece of the total GE Healthcare sales channel, because there's much larger base of general purpose. So when you add in the other general purpose scanners where the CardioWise Squeeze software will be sold as part of GE Healthcare's heart evaluation software package, there's an even bigger opportunity. So that's exciting. Can rapidly drive revenue and position CardioWise for a substantial exit. All right, so that was an example of a diagnostic imaging company, software company. Now let's talk about a medical device company. And Calyxo is a company that was based on technology licensed out of Harvard's Medical School, Mass General Hospital. It was a novel approach to kidney stone removal. And rather than just tell you what it does, I'm going to show you a video from that Clixo produced that kind of describes their unique medical device for kidney stone removal. So that was hopefully an interesting video for y'all to watch. Clixo has made tremendous progress. Um, they are rapidly taking over market share. What I want to do now is I want to um, share with you the investment history from the VIC Investor Network perspective to show you the kind of investment opportunity that is represented. So first funding round in Calypso was in 2016. That was at the time we were doing $250,000 founding investments. We're not doing straight $500,000 founding investments. But 2016, when we formed Clixo, we were doing $250,000 founding round investments. That went in at $250 per share. There's a $1.5 million Series A in 2018 at $8 per share. That was followed by a $15 million Series B in 2019, and there was also a buyout offer. So any of the seed investors who wanted to sell their shares, they were offered a buyout at $10 per share. That's, for 4x multiple in 3 years, that's attractive. But a lot of investors didn't take that buyout because that was discounted from the $15 per share paid by the Series B investors. That was completely optional. Investors had the choice. If they wanted to sell, they could. If they wanted to stay in, they could too. Uh, Series C, 32 million Series C in 2022 at about $14 per share. Again, pretty significant discount. But then a $50 million Series D and a third buyout offer in 2023. This time it was a less of a discount, $25 per share, discounted from $33 per share paid by the Series D investors. But even though it's less of a discount, this was basing the company at close to a $400 million valuation. But those investors were putting their money in as expecting to be the last round of investment before exit, given the tremendous traction that Clixo was getting in the market. And obviously they were expecting at least a 2x return, on their investment. So can't say for sure, but based on talking with executives and team members, my guess is that there will be a full exit in Clixo, and in either 2026 or 2027, it'll be at least double. They continue to just make tremendous traction, at least in my expectation, double the $33 per share paid in 2023. And of course, for investors who take the wait for the full exit, there is no discount. So $66 per share, it's over a 25x multiple compared to the original investment, and there's been buyout opportunities along the way. All right, with that, I'm going to turn it over to Michael. I'm not sure. It seems like I may be having a little bit of an audio chat. Can you say something, Michael?
Yes. Can you hear me?
Oh, I can. Okay, good. All right. So please take it over.
Yes. Thank you, Calvin. So I'm going to talk about A vaccine startup called Solaris Vaccines. If you can go to the next slide, please. So the current problem, the current challenges in the vaccine industry, I'm sure many of you are familiar with these, but it still takes far too long to manufacture vaccines, especially in response to emerging pandemic threats. Even with mRNA vaccine technologies, it took about a year to get a vaccine on the market, and that's using emergency use authorization. Many vaccines have inadequate levels of protection. So, a great example of that is the seasonal flu vaccine, which typically ranges from 40 to 60% protection, depending upon which strains are circulating and which strains were included in that seasonal vaccine. That doesn't even really touch on the current and increasing threat of pandemic flu outbreaks, where if that does happen and we need to create a vaccine within weeks or months, not years. We are ill prepared for that. The durability of immunity is questionable with a lot of these vaccine approaches. Many of them use toxic chemicals, for example, formalin, beta-propiolactone, or complex methods to manufacture, most notably mRNA vaccines, which is a technically very daunting manufacturing process and not really amenable to global distribution. And then a lot of vaccines have challenging storage conditions, a requirement for being, refrigerated or frozen. mRNA vaccines sometimes require, -80. The current Ebola vaccine requires storage at -80, and that can be very difficult to maintain the cold chain continuity, especially when we're looking at vaccines that are being sent to developing world markets. Next slide, please, Calvin. The platform technology that Solaris Vaccines is focused on was originally developed to inactivate pathogens in the human blood supply using a combination of UV light and a photosensitizer, which in this case is vitamin B2 or riboflavin. So, very safe, non-toxic chemical. If it's still present in the final product, not a problem. So that really streamlines the ability to manufacture these vaccines very quickly because the downstream purification steps following inactivation are not very rigorous. So we can get to identifying the pathogen, inactivating it, and producing at scale vaccine product very, very quickly. This approach is amenable to all classes of pathogens. We have very strong data for numerous viruses. We also have data for tuberculosis, which is a bacteria. And then also, we believe it is applicable to parasites and fungal pathogens as well, although that has not been directly tested yet. As far as the scalability of the technology, previously for the blood pathogen activation, a company called Terumo BCT developed a technology called Mirasol, shown in the lower left, which uses blood bags, 300 milliliter blood bags, to inactivate the material, blood, human blood, or in this case, a virus that we've produced. We add the riboflavin, we expose it to a certain amount of UV light, and it inactivates the genetic material of the pathogen. But, and this is very important, this is essentially the take-home message of this technology, is that it retains the antigens. It's very gentle, antigen sparing, and that is critical because, these antigens are usually complex proteins with different types of folding. They interact with one another. So by creating an inactivated but whole, intact pathogen, we retain those conformations. We retain the native environment of those antigens, and that then results in stronger protection, longer lasting protection, and we believe also potential cross protection. So, for example, if we use SARS-CoV-2 as the starting material, we've seen some cross protection for SARS-CoV-1 and MERS. And that could also be applicable to other viruses like influenza, where there's a great variety of different strains. And the ultimate goal, the brass ring, is to create a vaccine that is protective across all current existing viral strains, but also future strains that evolve due to crossover between different host species. Also storable at 4 degrees C, potentially even room temperature in a lyophilized format. And as I've mentioned, the manufacturing technology does not involve any any chemicals that are mutagens or carcinogens or flammable, which is not the case for many current inactivation approaches. Next slide, Calvin. So very briefly, the company is developing technology invented at Colorado State University. We have a worldwide exclusive license to the technology. We are focusing primarily on influenza, SARS-CoV-2, and TB. We also have active programs for dengue and several other pathogens, with more to be initiated in the near future. But our goal is to really demonstrate that this is truly a bona fide vaccine production platform that can be applied to any pathogen of concern. And because of the inherent characteristics, will allow us to respond to not only current existing pathogens, but future pathogens, which we don't even know about yet.